Today on the show, it is all about the investors and how to invest specifically in cryptocurrency with the platform Collective Shift. Now, the platform helps investors understand and navigate the world of crypto through education, research, and even access to its own portfolios. So to find out how it decides that portfolio and of course how investors can get introduced to it, we're joined now by founder Ben Simpson. Ben, thank you for joining us. Look, let's just start off with what it is you are doing at Collective Shift and how you are helping investors approach the world of cryptocurrency.
Awesome. Thanks for having me on, Elliot. Yeah, so when I first got into crypto back in 2017, it was such a whirlwind to try and understand how to invest and how to navigate all the different crypto assets out there. And even now, there's over 12,000 different crypto assets, and it's next to impossible for any one individual to try and keep up with everything that's going on. So for me as a busy business owner and other professionals, to try and understand what's going on in crypto and to invest on your own is just next to impossible. So we've put together an expert team of analysis and a membership platform for people to basically get from 0 to 1 and understand crypto in the fastest amount of time possible with all the education and resources required. And then we're also giving people our investments. So taking a lot of the workload off yourselves and onto us, the experts, to help you get into crypto faster.
So Ben, explain that process then. When you say, one of your portfolios does look at early stage crypto opportunities, and we will dive into some of those names, but what does it take for you guys to research into this coin, and what lessons can investors learn from how you approach research?
So the biggest, probably most powerful thing we have in Collective Shift is our community. So we've got over nearly 3,000 active Collective Shift paying members, as well as our wider free members. And what they provide us is a lot of their own analysis themselves. So we get to tap into some of the best investors in the world to see what they're looking across NFTs and crypto. And then we take the top 1 or 2% and run it through our own internal investment thesis. A little bit like a fund, but we don't take your money. We look at normal valuation metrics such as revenue multiples. We look at the team. We look at the tokenomics. There's a few different unique circumstances in crypto on how to value crypto assets that we take internally. And our team's been in crypto for a long, long time now, and we've seen the winners and the losers, and we've been able to take those lessons and approach them into our own portfolios. So as you mentioned, we've got an early stage crypto opportunities portfolio for those that are interested in the more higher risk, higher return assets. We've got a longer term growth portfolio, which is our top 12 assets that we think have a lot of potential over the next 4 or 5 years. And that's also a diversified crypto portfolio. And then we've also got an NFT portfolio. So we're looking at really good real world products in the crypto space that we think are good investments long term.
So let's just take a focus in on that early stage growth portfolio, just because it does have a few unique names. I had to look them up myself, in fact. And I think the biggest holding that you have is Maple. So tell us the investment thesis behind that one.
Yeah, so Maple is one of my favorites. It's actually founded by a company out of Sydney, and they are an institutional DeFi protocol. So basically what that means is they're taking out the middleman. So for businesses like for us, for example, that wanted to get a loan for their business, we need to go to Commonwealth Bank or the NAB or ANZ and do all the paperwork. We have to show all the numbers, and basically we pay the interest rate back to these banks. What Maple are doing at a really simple level is that they're taking out that middleman. So anyone can be and provide the capital to provide those loans to businesses, and the interest the businesses pay on those loans get the dividends and the interest back through the token. And this is the first time this has sort of happened in the world with DeFi. It is taking out the middleman and allowing everyday people to provide their liquidity and their capital to earn those rewards, and it allows businesses to attract and get capital much faster than having to go through a bank. So Maple, we invested in September last year, and the market cap was around $30 million USD, around $14 a token. And I think recently it's nearly hit $40 or $39. So it's up about 140% in a little over 6 or 7 months. And if you're in crypto, you'd know that DeFi is actually in a really heavy bear market at the moment. Like a lot of projects are down 70 or 80%. So I'm extremely bullish about this asset and a few others we have in the portfolio.
So when it comes to that portfolio, as you did just say there, it is a DeFi product. Are you looking specifically into really those real world applications? Because of course, a lot of press attention is paid to some of the more meme stocks, as we mentioned at the top, but you're really focusing in on what is going to help improve the world of finance.
Yeah, correct. So my personal investment strategy, and I've got a team of sort of experts that help us take that thesis to a new level, is really being able to look at products that'll be used in the real world. So if you remember back in sort of the dot-com era or even the ICO boom in 2017, a lot of investors or a lot of companies try and come out right at the peak of the market and more of a cash grab, and they create these theoretical great ideas and they raise a bunch of money, but unfortunately they don't find product market fit. And we're seeing that right now in DeFi, for example. There's so many crypto assets out there trying to win in DeFi, and it just simply won't be the case that they'll all win. So we're really looking for real world use cases, companies that are already generating revenue, that have real partnerships, and that can, I guess, take their crypto native asset and bring it into the real world. Another asset we have in the early stage crypto opportunities is a project called DHedge. Now this one has taken a bit of a hit since September. But the best way to think about DHedge is like the eToro copy platform. So if you ever use eToro, you can go on and you can copy the expert traders. But again, you pay all the fees to eToro. I think for some assets, you're actually only buying synthetic assets. You're not buying in the underlying asset themselves. Where DHedge again is taking out that middleman. So for example, I can have a portfolio on DHedge and I can have my 6 crypto assets that I'm personally buying into, and then anyone can actually add their capital and follow my trades live on chain using DHedge. So again, it's a real world product that we see real utility in and think it's got a long-term value proposition.
I have to say, I can certainly see opportunity in that one myself. I always trust the person slightly smarter than me, so happy to steal their trades there, Ben. Now, you do have the longer term one, and you actually are able to break up some of your holdings into sectors, of which I believe DeFi is your lowest sector by asset management. What's the top sector that you are investing in?
So the biggest out of the LTG portfolio is Bitcoin. We think Bitcoin, I don't know if you can see my t-shirt, but I've got my Bitcoin shirt. I'm a big Bitcoin bull. And we see Bitcoin as the blue chip. It is the cream of the crop. It's got so many use cases, and it's the strongest network in the world, and it's doing more transaction volume than MasterCard and Visa, and the network of Bitcoin has never gone down. And I think Bitcoin's got a long future ahead with everything that's going on with rising inflation rates and the ongoing war, and just the continual printing of money in the world. And I think a lot of people are going to start to realize that Bitcoin is this alternate asset class that you can store your wealth in, and it is a store of wealth. And as Bitcoin's got that limited supply, as more people wake up and realize what's actually going on with the normal day-to-day fiat currency, I think Bitcoin will continue to be growing way above 40,000 in my opinion. And then below Bitcoin, we've got our layer 1 and layer 2s. So the best way to think about your layer 1s is like investing into the app store, which then layer 2 solutions can build on top of. So it's like buying into your Apples of the world or your Androids of the world that have companies built on top of. That's like the infrastructure layer. And then you've got layer 2s that build on top. So we diversify that long-term growth portfolio over those different asset classes with inside crypto, so we can sort of even out the volatility, because crypto is very volatile. And our aim in that portfolio is to beat the performance of just holding Bitcoin over the next 4 years. And we launched that back in December, and it's up around 9 or 10%, I think, against Bitcoin. So yeah, we're really happy with that position as well.
So one of the other big assets that you do have, Ben, is Ethereum, and it seems increasingly there's sort of the two diverging paths of the Bitcoiners and the Ethereums. What do you make of the upgrades that they're coming to have, the proof of stake transition? What do you make of it all? I just saw recently that some people even think it will eclipse Bitcoin.
Yeah, I'm super bullish on Ethereum as well. Chose not to wear that t-shirt today. I've gone with Bitcoin, but Ethereum, for those that don't know, are going through a stage where the blockchain mechanism that allows Ethereum to run is at the moment called proof of work, which is very similar to Bitcoin, where it requires miners or people within the ecosystem to verify the transactions on the blockchain. And it does require a lot of computation power. It requires a lot of computers, a lot of miners to run that network, which is what that's caused, in effect, at a very simple level, is the high gas fees that pay on Ethereum. Where Ethereum's going to, and they've tried for a little while now because it's very difficult for them to move to this model, which is called proof of stake, where you actually have nodes within the system that stake more than 32 Ethereum, and staking that 32 Ethereum allows the network to run. And what that'll do is actually reduce the inflation rate of Ethereum. So the amount of Ethereum that's coming into circulation each day, each week, each month, after this upgrade will drastically decrease. So we'll see the inflation rate go from around 4% down to nearly 0%. So I think what we're going to see is a real supply shock in Ethereum, with the amount of Ethereum in circulation decreasing and the demand increasing, with more apps and utility and investors finding Ethereum as this, again, smart contract platform that is leading amongst other crypto assets. I think Ethereum's going to see a bit of a price run as well heading over the next couple of years.
Now, Ben, we will just quickly touch upon your NFT portfolio as well. Obviously, everyone has a view on NFTs now that they're getting into sport, music, art. What is your thesis on what makes a good NFT investment?
Certainly not the first investment I bought. I bought straight into a scam when I got into it last year. Don't recommend doing that. Look, I think the NFTs, just like the ICO phase back in 2017, they're at the peak of the market, which was around December, January, just recently. We saw a lot of people and a lot of attention. And what happens at the top of the market is that greedy people come in and try and launch these NFTs as a cash grab. And what we saw over the last 3 months is the NFT market has steadily declined, or over probably 40-50% since then. And that's all a part of a natural market cycle. And going back to the 2017 bubble of the ICOs, what we see now is probably only a handful of projects actually survived that, very similar to the dot-com bubble again. History does have a sense of repeating itself, and you have these natural market flushing out where the bad actors disappear, and you get the real world applications of NFTs that will sustain. For me, what is a good NFT is really down to the team and the community, and are they continuing to deliver even though the cash might not be there in a bullish market. For me, one of my favorites is VFriends with Gary Vaynerchuk. I'm a big fan of Gary V, and he's building VFriends with a set of characters that allow you to get real world access with Gary. So it might be you get to sit courtside with him at an NBA game or attend his conference. I think the real world utility aspect of NFTs I'm really excited about. And even from a local business perspective, the ability to have what's called a smart contract in your NFTs, where you can earn, the original holder can earn a percentage of all transactions that NFT ever does. So if you think about the Mona Lisa, for example, let's talk about an artist. When that art piece is out in the market and that is sold on to second, third, fourth, fifth person, the original owner of that art piece never gets any credit. They never get any remuneration for those additional sales. With NFTs, you can build in the smart contract that any additional sales that happen beyond the original sale, you can earn a percentage of. And I think that's a really exciting proposition for business owners and artists and musicians, where you're no longer selling all the rights to the next owner, but you can always own a piece of the property or the thing you're selling.